Have you thought this through?
No way will that work.
Are you sure? Is there any money in that?
You'll never make any money doing that. How are you going to pay the mortgage? Just get a job.
You're going to try to sell that? Why can't you be normal like everybody else?
All right. Were your parents morons too?
The savvy entrepreneur to the rescue.
Congratulations. That really turned out well.
That's a really good job.
I'm really winning. I'm surprised.
You know, I wish I thought of that.
I never thought of anyone big. How did you do that?
I'm so glad you're pursuing your dreams. I wish I had the courage to follow my dreams.
Hey there, folks. Welcome to the Savvy Entrepreneur Show. We're broadcasting here on WLCB 101.5 FM, based in the greater Chicago-Milwaukee area. If you're an entrepreneur or a small business person or thinking about becoming one, this show is for you. I'm Doris Nagel, your host for the next hour. I'm a crazy entrepreneur myself, and I love helping other entrepreneurs. I've counseled lots of startups and small businesses over the past 30 years, but I've also started or helped start at least 9 different businesses. I have seen a lot of mistakes, and I've made plenty of them myself. So the Savvy Entrepreneur Show really has 2 goals: to share helpful information and resources, and 2, to inspire. Hopefully make your journey as an entrepreneur faster and easier, and maybe just a little bit more fun. To help with that, I have guests every week on the show who are willing to share their stories and advice. And this week's guest is Joey Frayne. Joey is a technology investment manager for something called the Wisconsin Economic Development Corporation, often called by its shorthand name, the WEDC. His primary role at the WEDC is to work with entrepreneurs, investors, service providers, and government officials to help high-tech startup and early-stage businesses with their funding needs. The WEDC has a number of programs, including one that we're going to talk about in particular today, called the Qualified New Business Venture Tax Credit. Now, prior to working at the WEDC, Joey worked in wealth management and his family business. He holds a bachelor's degree in economics and a certificate in entrepreneurship from the University of Iowa. He grew up in Dubuque, Iowa, where his family was a Little Caesars franchisee for over 30 years. He currently lives in Madison, Wisconsin with his wife, his 2 daughters, a dog, and he says he enjoys hockey and especially coaching his 2 girls, along with mountain biking and running. Joey, thanks so much for being on the show today and being willing to share a little bit about the WEDC and the New Venture Business Tax Credit. Welcome to the Savvy Entrepreneur Show.
Thanks for having me. Glad to be here and be able to talk about what we're doing at WDC to help entrepreneurs.
Yeah, lots of exciting things going on in Wisconsin these days. So let's start out by just talking a little bit about what is the Wisconsin Economic Development Corporation? Why was it created and when, and what does it do?
Yeah, sure. So Wisconsin Economic Development Corporation, or WDC, we consider ourselves to be the lead economic development organization in Wisconsin. So we're really looking to lead economic development efforts across the state. You know, we're looking to do that by providing resources, operational support, financial assistance to companies, partners, and communities across Wisconsin. So we work with right now more than 600 partners across the state, which those include our, regional economic development organizations, academic institutions, and industry clusters. I mean, we're really looking just to create solutions to help business communities and people maximize their potential in Wisconsin. So WDC was created back in, I believe, 2012. So I wasn't with WDC at the creation. I've been with the organization for just about 6 years, but I was created back in 2012. And it was really an offshoot of, before WDC, the Wisconsin Department of Commerce is what provided, economic development activity in Wisconsin. And there was, a thought process across the state that by setting up WDC, looking to have this public-private partnership would be the best way to kind of move forward with economic development efforts. So that's when WDC has been created. Like I said, roughly about 8 years ago. I've been with the organization for just about 6 years.
So is it an agency or is it more of a public-private partnership?
Yeah, so we're a public-private partnership, and probably the simplest way to explain how we're set up at this point. We receive a block grant from the state of Wisconsin budget to do the work that we do. And then we have a board of directors that we work with. And that board of directors is going to be made up of some elected officials. So we have 4 elected officials on our board of directors. And then we have other people from the business ecosystem across Wisconsin. And that board's going to work with our management team to allow us to come up with the programs that we're going to provide out to businesses across Wisconsin. So I think that's the simplest way to explain how we're set up. Public-private partnership, consider ourselves to be a quasi-public agency. So a lot of what we do is governed by program guidelines. We do have some programs that are statutory in nature, and QMBV, or the Qualified New Business Venture Program that we're going to talk about, is one of the statutory programs. But the majority of our programs we have are created kind of in working with our board of directors, working with our management team, and doing that via program guidelines, where when the Department of Commerce was around, if we were a fully state agency, everything would be created via statute.
So from a big picture perspective, how does the WEDC fit in with all the other programs and resources that the state of Wisconsin has to support small businesses and entrepreneurship?
Yeah, I mean, I think from kind of a high level, we work with those partners. So we come up with programs across our division. So maybe a simple way to look at that is, we have programs that would be considered more traditional economic development. So looking to work with, companies that are in Wisconsin that are looking to grow, looking to work with companies or looking to move to Wisconsin, looking to work with communities to help them have projects, things like that. So that's, we have regional economic development directors across the different regions of the state that are kind of working on that level. I would consider kind of more traditional economic development. We have an international team who's working with businesses to help them with their international business development. And then we have my team, which is the Division of Entrepreneurship and Innovation. And we're really looking to support entrepreneurs across Wisconsin and do that in a few ways. Have 3 direct assistance programs currently. That's my role to manage. And then we have other programs that are geared to work with partners. And those partners could be other nonprofits, other economic development organizations, universities, industry clusters, organizations looking to support entrepreneurs. So I'd say from kind of the high levels, we're looking to, have our programs that are going to, like I said early on, lead the economic development efforts of the state, but also working with these partners. And they're going to have programs that are going to be complementary to what we do.
Well, I'm curious, just from a personal level, how and why did you get involved with the WEDC? What was it that attracted you about it?
Yeah, so I'd say for me, I guess personal story a little bit is I was with an organization you said early on introducing me, worked in the wealth management investment world for the majority of my career before coming to WEDC. The organization that I was with had they were acquired or merged with another group. And the culture would just kind of change a little bit with that acquisition. So at that point, I had been there for 7, 8 years, and it was just at the point where I was ready for a new challenge. And I think the fact that, they had that merger / acquisition kind of led me to start looking. So at that point, just was, looking at different opportunities out there. And the other thing you mentioned in my intro is I grew up with my parents being entrepreneurs, more on the Main Street side. As you said, they were Little Caesars franchisees. So, working in that business growing up, always kind of being around entrepreneurs, it's something I always had interest in, whether that was, do I do something on my own? Do I take over their business? Had some educational experience around entrepreneurship at University of Iowa. So as I was kind of looking for a new role, both kind of in wealth management or opportunities to see what else was out there, I found this role at the Wisconsin Economic Development Corporation. So put my resume in and started talking to the team. And the more I learned about it, I thought it was just kind of a good fit based off of my personal background, my professional background. And, here I am 6 years later, still doing it and just really enjoying, being able to help these businesses across Wisconsin. It's great to go to work every day, realizing you're here to try to help those businesses. And also, it's awesome just to talk to these entrepreneurs. They're all very passionate about what they're doing. So, every day I talk to a new entrepreneur that has a different idea and that they're super excited about. So it's really easy to go to work when you get to work with people that are so passionate about what they do. And I have a passion for helping them, try to reach their goals.
Well, and it must be very rewarding to see, particularly since you've been there now for a few years, to see some of the progress and some of the positive impacts, which we'll I hopefully talk about a little bit later in the show. Let's turn our attention to the focus for today, which is the Wisconsin Qualified New Business Venture Tax Credit. That's a mouthful for most of us. Talk a little bit about what it does and who it's designed to help.
Yeah, sure, definitely. Yeah, it is a mouthful, right? I know people struggle daily to say, qualified new business venture, or QMBV even is a little bit of a tongue twister. So, I mean, let's just start on a high level. The program was created to incent equity investment in technology-based businesses in the state of Wisconsin. And as I talked about a little earlier, kind of our setup, a lot of what we do is not statutory in nature, but this program is one of the few programs that WDC has that's a statutory program. And the reason for that is it carried over from the Department of Commerce. So when WDC was formed, this program came to WDC from the Department of Commerce. So the inception of the program was actually back in 2005. It was created via, like I said, a statute. A lot of people refer to it not only QMBV, but you'll hear a lot of people call it the Act 255 program, because that's the act that created the program. And again, I wasn't there back in 2005 when it was created, being here 6 years, but from my knowledge, as I've learned about the program, really, I think the thought process back then when it was created was starting to see more early stage opportunities in Wisconsin. At that point, we're seeing, I think WDC was seeing, or the ecosystem was seeing, a lot of bioscience type opportunities. And a lot of those opportunities were coming out of the University of Wisconsin-Madison. And we know there's an investor base in Wisconsin. So there is, capital to be utilized in the state. But being a Midwestern state, being Wisconsin, that capital is generally conservative. So, the state, the ecosystem developers or builders really were looking to see what they could do to try to incent the capital in the state to put some of that capital towards these early stage companies. Like I said, looking to grow growth-oriented technology-based businesses, because those investments are going to be risky investments. A lot of these companies are an idea. There's just a lot of risk involved to try to get these companies off the ground. But if they are successful, they have, strong growth potential. So what could the state do to incent that investment? And this program was created, and what the program allows companies to do is they receive cash from investors. The investor is going to receive equity in the company for that cash investment. And then the investor is going to be able to take a 25% tax credit on their Wisconsin income tax based off of that investment. So it's really been the state's way to try to incent investment into these companies. And, it's also de-risking that investment a little bit on the front end, because the investor is going to at least receive 25% of their money back via that income tax credit.
Well, just to clarify, because I saw somewhere somebody referred to this as like an angel credit, which I guess angel firms and venture capital firms would certainly be targets, but does this credit allow even individual investors or family offices that are investing their family's wealth? It's not just limited to venture capital and angel investors, right?
No, it's not. So basically, we can get a little technical here, but the program provides two tax credits. So the one credit is going to be the angel tax credit, and the second credit, or the second credit it provides, is called the early stage seed credit, or that's the credit that's going to go to venture funds. So primarily the people or entities that are going to invest in these companies are going to be, I think, just to keep it as simple as we can, three different sources. So you're going to have individual angel investors, and that could be, that could be your neighbor, that could be, kind of people that kind of that family and friends network. Take that one step forward. That angel investor could be someone that has had success, either as an investor or as an entrepreneur, and now they're looking to make investments into early stage companies. Or you have, angel groups or networks that will pool their capital together to make the investment. And I guess what that would be is you'll just have a group of high net worth individuals that will create, an LLC or an entity to make the investment into the early stage companies. So those kind of three groups of people, the angel groups, they're going to receive what's called the angel tax credit. if a company is certified in the program, that credit, like I said, 25% tax credit, going to be an offset of their Wisconsin income tax. So to receive that credit, you're going to want to, you have to be a Wisconsin taxpayer because the credit's, non-transferable, sellable, or refundable. The other credit that I mentioned, the early stage seed credit, which it all falls under the same umbrella, that's the credit that we actually issue out to venture funds. So an offshoot of this program is we work with venture funds, whether they're Wisconsin-based venture funds or we work with a lot of out-of-state venture funds to qualify them as venture funds. And then at that point, they're able to receive what's called the early stage seed credit. And that credit's going to be issued to the venture funds. And that credit is actually able to be sold or transferred. So, a lot of the venture funds we work with have an LP base made up of, Wisconsin investors. So they're just going to get the tax credit and K1 that credit out to their investors. But some of the funds we work with might be out of state, might have, LPs out of state, or have an LP base made up of, organizations or entities that can't use the tax credit. So they are able to sell the credit. So there's a market out there where there's, people, organizations that look to buy the tax credit. So it's all kind of falls under the same program, but we're actually issuing out two different credits depending on the makeup of who the investor is.
Yeah, I guess that's really interesting. I had thought through that, but it's great if you're a high net worth individual in Wisconsin thinking about investing within the state in a tech company. That's great, but obviously it's also great for the state and for small businesses in Wisconsin. Even if the venture capital fund is based in Silicon Valley, you want them to be incented to invest in Wisconsin companies because that's a good thing for the businesses and for the economy of the state, right?
Correct. Yeah. And you're seeing more and more investors, venture fund investors either, popping up throughout the Midwest or, looking to the Midwest for investments. So, we're looking to work with them. Hopefully the tax credit incentive will, help them look at Wisconsin-based companies. And we are, working with more and more out-of-state venture funds.
Well, I think I read somewhere that there was recently a change in this program in the laws. Is that right?
Yeah, there was. So let's see.
A couple years ago?
Yeah, a couple years ago there was, a change in the statute, and what that change was. So I mean, again, can get into a little bit, but when a company gets certified into this program, they're able to offer up to $3 million in tax credits to their investors. So, with that $3 million in tax credits, so that allows them to raise $12 million. Sorry. $12 million before the program. So the max is at $3 million. So they can raise up to $12 million, allows them to issue $3 million in credits out to their investors. The change was made is before investors or companies were able to offer up to only $2 million in tax credits. So they were able to raise up to $8 million. So basically raise the cap of credits to allow companies to raise a little more capital and still incent that tax credit. So.
Interesting. Yeah, just to obviously get more cash flowing and the reality is that for some of these companies, particularly in the healthcare segment, which is a segment I'm pretty familiar with, sometimes there's a lot of money that's needed up front to do clinical trials or even basic research. The investment is pretty daunting. So this probably helps more companies who need that kind of cash early on, right?
Correct. Yeah. And I think that was a lot of, the push on, raising that cap was exactly what you say is the companies out there that are looking to do stuff that needs, some sort of FDA approval, clinical trials, they're going to need to raise a vast sum of money to get something across the finish line or get something to the point where, another organization is going to pick it up to get across the finish line. So, raising that cap gives those companies a little more room to raise some more capital.
So is this program unique to Wisconsin? Because I know this show streams worldwide. So there may be people outside of Wisconsin who are listening in. Is it something that other states have, or is this a pretty unique program?
No, definitely not unique to Wisconsin. Other states do have angel credit programs as well. I think what's maybe been unique to Wisconsin a little bit is that this program's been around since 2005, straight through, no interruptions. I haven't taken a look at other states recently, but I know over my 6 years at WDC, every year or two we'll kind of look and see kind of what other states are doing. And it seems like with some of the other states, the programs might kind of come in and out, to kind of depending on what's going on and, in the political environment. So, but it is something that other states do have. And I'd say they all have kind of unique twists, right? What the percentage of tax credit might be different. The amount of tax credits available for investors might be different. Caps
the
on
kind of companies that are
Yes.
qualified.
So they all kind of have their unique plays on the program, but there are other states out there that have tax credit programs. Someone next door to us, for instance, I guess I don't know where it stands currently because I haven't looked at it, but Minnesota has had a tax credit. I think even you mentioned Illinois. I think Illinois has had one. Again, not sure where they are currently just because I haven't looked at it, but I know both those states have had them before as well.
Well, speaking of kinds of companies that can take advantage of this program, what kind of companies is this program really targeted for, or are particularly well suited to take advantage of this program?
Yeah, sure. So I think, on just kind of a high level, simple overview, the kinds of companies that it makes sense would be, obviously companies that are looking to raise equity capital from investors, but also companies that have some sort of, technology innovation and also have the ability to grow, right? Look, an opportunity that an investor is going to be interested in because of the growth that the company might be able to achieve, scale that they're looking to do. So, as I mentioned, this program is statutory in nature. So I think, it's a good question for me just to give you a quick overview of kind of what the statute looks for, because really ultimately that's going to kind of drive us to a company that this makes sense for. So the statute looks for a few things. Number one, obviously it's a Wisconsin benefit. So the statute's looking for the company to be headquartered in Wisconsin, have the majority of the management team here, looking for the employment base to be in Wisconsin. So 51% of both headcount and payroll employees need to be in Wisconsin. Looking for early stage companies. So we define that by less than 10 years old, less than 100 employees, and hasn't raised more than $10 million in private capital. And then lastly, I think it circles back to your question is, type of business. So like I said, looking for a company that's engaged or committed to engage in, some sort of innovation by creating, technology. So some good examples of that, or easy examples are, a biotechnology, bioscience opportunity, looking to do some sort of computer software, hardware, or really looking to provide a service that's going to be enabled by some sort of, differentiating proprietary technology. So I'd say kind of pretty standard, when you look out there at where investors are putting their money, those are the type of companies the statute's looking for.
Well, and those are, as you alluded to earlier, those are high risk companies because they do need often a lot of capital and a lot before they're profitable. They're also in fields that are changing very, very quickly. And, the failure rate's pretty high for a lot of those kind of companies, right?
Yeah, correct. Yeah, I mean, they're, like you said, these companies are looking to, innovate in something, right? So a lot of times they're looking to kind of change the way something's done, or, change the norm. So there's going to be a risk there to try to get, market adoption. It's going to be a risk that the market's not going to be, big enough. So yeah, they're just going to be risky in nature from the standpoint, as you said, the companies are really early. They're going to need capital to get their product off the ground, bring a team on to execute on the product, to market the product, and see if they can, find the revenue that they think's out there for it. So just, risky in nature, and, at the earliest stage, like you said, a lot of these companies, won't make it, but hopefully the capital can get them there. So.
Yeah. I'm curious. So this is kind of in some ways an indirect incentive for small business growth in Wisconsin, right? In other words, it's not a tax credit directly to the startup company itself. It's not a grant to them. It's indirect in the sense that it's incenting investment in those companies. I'm curious, what kind of mechanisms are in place to make sure that the benefit to the investor trickles down to the company they're investing in?
Yeah, sure. So a couple things kind of in the statute really looking, like you said, this is not going to be a direct cash or a tax credit to the company. It's going to be a tax credit to the investor to incent them to give capital to the company, and that's going to be their benefit, right? Is they're hopefully going to get capital from the investors to move forward with what they're looking to do. But there are a few things kind of built in the statute really around that I guess would be considered kind of protection mechanisms. And kind of the first is from the company perspective, once an investor puts their capital into the early stage business, they're required to hold that investment for at least 3 years. If they don't, then the tax credit would be revoked by the Wisconsin Department of Revenue. So really that's kind of, I think that's the statute's way of protecting the company, right? We're looking for these investors to be making long-term investments in the company, not just investing to get a tax credit, because it's not going to benefit the company to try to have to figure out a way to, buy that investor out in the near term, right? Because as you said, they're looking to grow. They're, not going to necessarily be profitable. Cash is king for them at that point. So the statute does have that built in there that, we're looking for the investor to at least hold that investment for 3 years. And if they don't do it, we'll get notified on that, and then we'll notify the Department of Revenue, who's going to look to revoke that tax credit. And then kind of another offshoot of that, and this is really to kind of protect, I'd say more the state's interest in things, is we also, once companies issue out tax credits to their investors, the statute requires them to stay in Wisconsin for 3 years. So again, kind of similar thing is we're not looking for a company to move into Wisconsin, and send investment based on the tax credit and then move outside the state. So if the company would move within that 3-year timetable, the state would claw back the credit, and then the company would owe us the amount of credits they issue out to their investors back to the state. So in the first year, they owe us 100%, second year, 80%, third year, 60%. So again, looking for companies to, grow, hopefully, and build, long-term businesses in the state of Wisconsin, as well as looking for the investors to be making long-term investments that they're going to put the cash into the companies and, hold that investment to hopefully, help these companies move along and be successful.
Fantastic. All right. Well, we have to take a quick break for station identification and a word from a couple of our sponsors. Folks, stay tuned. We'll be right back with our guest this week, Joey Frayne, who is with the Wisconsin Economic Development Corporation. He's here this week talking about the WEDC and some of its programs. So stay tuned, folks. We'll be right back with Joey. Hi there, folks. This is Doris Nagel, and you're listening to the Savvy Entrepreneur Show. We're here this week with our guest, Joey Frayne, who was kind enough to join us from the Wisconsin Economic Development Corporation, or WEDC. He's here this week to talk about some of the WEDC's programs, and in particular, something called the Wisconsin Qualified New Business Venture Tax Credit. Now, before the break, Joey, we were talking about some of the mechanics and who might be qualified for it and how it actually works. I'm curious now to talk really about some of the successes and some of the stories, some of the statistics of how this program has helped Wisconsin businesses. So this is probably really the fun part of the program, right? And probably the most rewarding for those of you who work with these companies. Talk a little bit about some of the successes, some of the ways that this program has helped businesses in Wisconsin.
Yeah, sure. So, I mean, that's, one thing that we do on a yearly basis is, we're going to collect a report from each one of the companies that we have in the portfolio, just to kind of see where they're at. And it allows us to do a couple of things is, make sure a company's still meeting the statutory requirements of the program. So, still in Wisconsin, still doing what they said they were going to do when they applied for the program. But it also allows us to collect, some metrics on what they're doing. So, how many employees they have, what the average salary they're paying, how much capital they've raised, either that's, been utilized with the tax credit or, other private investment, grant funding, things like that. So, really that's one way we're kind of measuring the program on a yearly basis is just kind of looking to see where the companies are at. So as I said, program was created back in 2005. So, it's grown over those times. And I'd say, I think one thing that would be a good measure of success is just to see the funding ecosystem grow in the state of Wisconsin. Even in my 6 years at WDC, seeing more, angel investors out there looking to make investments. Like I said, seeing more funds, whether they're in-state venture funds being created or out-of-state venture funds looking to invest in companies. So, that's been one thing that's been excited for me to see is just, the continued growth of the investing ecosystem, which in turn is, growing the amount of companies we're seeing. Even in the current times we're living in, over the last how many months, 9 months, I guess we're probably almost at here, is having tons of conversations with entrepreneurs that they're starting companies. So even kind of in the times we're living in, there's just a lot of activity going on in the state, which is cool to see. And there's a lot of activity going on in all across the state, not only, Madison, but, Milwaukee, and, talking to companies up in the Green Bay area, Fox Cities, over in Eau Claire, La Crosse, just seeing stuff, across the state, not just focused in Madison.
Yeah. Well, it's interesting, I talk with lots of different entrepreneurs and people who support entrepreneurs. It's interesting. One common theme I've heard is that entrepreneurship seems to really have taken off because of COVID. Either people are working from home and maybe have a little more quiet time and some time for reflection. People have had their jobs disrupted, working for big companies. They've been laid off or furloughed. They don't like it. They've been thinking about different things. And it sounds like you're seeing some of the same kinds of things.
Yeah. Like I said, I've been busy. I feel like every week I'm having, more and more conversations with the entrepreneurs, right? Every week my calendar is, pretty full, just having conversations with people starting stuff. And, those are both, businesses that, are going to fit into what we do with the QMBV program or, the other few programs that I manage. Or, maybe they might not be a fit for that because it can be a more, Main Street business opportunity, but someone that's going to be a fit for one of our partners, right? So, yeah, I feel like my calendar has just been, super full of having those conversations, which has been good because, in normal times, a lot of those conversations we have is because we spend a lot of time out at different entrepreneurial events, right? So you meet a lot of people there, just kind of have those ad hoc conversations, when you're at those events. So it's been fun to, know that without those in-person events that I'm still having the conversations that I expect to have. And like I said, it seems like having more than ever.
Great. I'm delighted to hear that. So, back to the reporting and metrics of success, I'm curious whether you've got any kind of hard numbers or even stories and anecdotes of companies that are success stories because of this program, or maybe indirectly because of this program.
Yeah, sure. So like I said, we collect that data every year, put it out on a report that we'll, put on our website, send out to our stakeholders. So, for instance, just can give you some numbers on kind of what we saw for 2019 results out of the qualified new business venture program. So right now we're still, obviously investments are still being made in 2020, and we won't collect that data to kind of early next year. So to have the data from the year previous, but of the companies in the QMBV program in 2019, we saw those companies receive $488.3 million in investment. And with that, we issued just under 15 million in tax credits. So that 488 million in investment was made up of, roughly 58 million in investment that qualified for the credits. We saw those companies receive 38 million in grants, and then another 391 million in kind of other private investment. And that could be just investment that's not going to qualify because it might be out of state investment, could be investment that maybe was done as a convertible debt or debt investment that's downstream going to turn into equity. So that's kind of some of the numbers that we saw from 2019 or 19. Just kind of looking at another thing that we measure. So that in the company, so it's 240 companies that made that up. Saw those companies have just under 4,000 employees. And then the salary that was the average wage, which is always something that we like to look at, is they paid an average salary of just over 73,000, which is well above what the Wisconsin annual mean wage of just
right.
about $49,000. So,
Right. So these
that's
are not just jobs; these are good jobs.
yeah, good paying jobs, right? That are, there's going to be some economic development or economic, impact based on back to the state, based on what these people are doing in the community, right? They're paying, property taxes. They're, obviously spending money in the communities, things like that, because like you said, they're good paying jobs. So that's kind of some of the stuff that, we've looked at kind of in our report. From a company success standpoint, I mean, there's a lot out there. I guess I don't want to pick just one because, don't want to be playing favorites, but, we've seen successes of, obviously companies having exits, selling to larger corporations, so having exits, seeing companies grow. And I mean, there's a lot of stuff out there that's really to be determined. I think there's been a lot of, like I said, in the 6 years I've been doing this, I think there's been a lot of progress, a lot of activity going on. So I think there's a lot of stories out there still that are to be told. And I'm kind of excited to see what happens there, because the benefit there is going to be is, when they have some of these companies that are out there in our portfolio right now have successes, we're going to see capital flow back into the ecosystem, right? The investors that have invested in them are going to have capital come back, and hopefully, obviously the founder and employees that are working for these companies, they're going to get some capital cycle back to them, and hopefully we'll see, these founders become repeat founders, and we'll see the employees that work for these companies now they're starting their own company, or maybe they're now investing in these early stage companies. So I think that's really going to be excited to see, hopefully that play out and see the ecosystem kind of develop from there.
I'm listening to your numbers from 2019 and they sound impressive, but I guess it might be helpful to have some kind of sense of the growth of the program. From a pure number standpoint, it's hard for somebody who isn't working with the program to know, is that a big number? Is that a small number? Is that like huge growth compared to where you started? Any sense that you can give to those numbers to give them some perspective?
I think, one thing that we've seen, and I'm just kind of looking at the numbers, is obviously the amount of credits that we issue each year has grown. So I guess the report I have in front of me, and the funding ecosystem is going to be a little cyclical depending on the year. Some companies could be raising, large amounts of capital, things like that. But just kind of the numbers I have in front of me, back in 2008, we issued just roughly little over 7 million in credits. And, that's, like I said, this year up to, 14, almost 15 million in credits. So obviously see the amount of credits issued growing. Obviously with that, that means you're seeing more investment in the company. So I think we see things grow, but I mean, it can ebb and flow. Like I said, I've been doing this for 6 years, and the amount of credits we issue each year, it's going to fluctuate depending on kind of what companies are doing. Obviously the portfolio is growing. Back in 2005, there was, 0 companies certified. Now we have 240. So, in the last, I guess kind of again, going back to 2010, we had 125 companies certified. And obviously companies are going to kind of drop in and out depending on kind of where they're at, but now we're up to 240. So I think right there just shows there's just a lot more companies that are certified into this program that are out there looking for capital. And that number is, continuing to grow every year. So it will have companies drop out because, maybe they'll have an exit or they'll fail or whatever, but the number of companies we have in the portfolio is growing on a year by year.
Yeah, it's growing substantially.
Yeah.
I'm curious, can small businesses use this tax credit when they pitch? Because a lot of entrepreneurs, particularly startups, seed companies, are very focused on raising money. And I work with a lot of companies who are very fixated on the pitch, right? Pitching to various investors. Is this something they can use as part of their pitch?
Yeah, no. So I'd say we see, most of the companies that are certified into the program, when they're pitching, they're going to mention that they've been qualified as a new business venture. So I'd say that's pretty common to have that in the pitch deck. And I kind of with that, a lot of our best, I'd say, referral sources is, maybe for some reason a company hasn't kind of been sent our way via our network and they start talking to investors. I'd say pretty early on in those conversations with investors, if it's not in their pitch deck, they're probably going to get asked that question. And if they don't know what the program is or they'll have it applied for it, that investor or group of investors is going to, I'd say, generally introduce the company to myself or someone else on my team.
Well, so it makes you look more sophisticated as a potential company to be invested in if you know about the program and have already thought through some of the angles for your potential investors.
Yeah, and we spend a lot of time, at pitch events or mentor swarms, whatever you want to call it as well, from our team perspective. So, we're spending a lot of time with the different accelerators in the state or at the different, conferences, events. So we're out there a lot, listening to the pitches and, introducing ourselves to companies as well.
Wait, so are these pitch events typically how companies find you, or what are the outreach methods?
Yeah, so I'd say, the way that companies find us, it's going to be kind of multiple ways. So, events is definitely going to be a place. We're going to be, myself or someone else from our team, I'd say WDC is going to have we're going to be a presence at any, hopefully most or if not all, entrepreneurial events in Wisconsin. A lot of them are going to have booths, so people will kind of find us from that way. And then we get a lot of introductions just kind of from the ecosystem, right? So other entrepreneurs that have done this, investors, accountants, lawyers, people that are out in the ecosystem, we get a lot of introductions that way. And then honestly, some people might just find us, right? Like, I guess if someone's not at an event or maybe kind of new to the ecosystem and they just are out there, Googling or kind of looking on their own for resources for entrepreneurship, they'll find us, they'll find our team, and they'll just, cold email or call us just, from our website. So, I mean, that happens as well. So, I mean, that's really how we're found is kind of those ways, I think, many ways, but I'd say the most of them come from kind of our network, right? Those service providers, us being at events, investors, other entrepreneurs, things like that.
Where optimally do you see this program headed longer term?
Yeah, I mean, I think that's really, to be determined. I mean, as we talked about, at the beginning, it's a statutory program. So any changes that need to be made are going to have to go through, the elected officials. So, at this point, I think the program is there. It's working, doing what it's meant to do. But, as entrepreneurs, investors, people in the ecosystem, if they think there's changes that need to be made or tweaks that need to be made, it's really going to be kind of up to them or people in the ecosystem to kind of work with, both WDC and the legislative officials to kind of see where it needs to go. So hopefully from my perspective, it will just, continue to grow and we'll see more companies into the program and more investment received by those companies.
Well, it sounds like a great program, and it's great to hear that more and more companies are benefiting from it. So if there are investors or startup companies listening who would like to learn more or think they might be qualified, what's the process look like?
Sure. Yeah. Generally how the process is going to work is, someone's going to either reach out to myself or, someone else on my team, or, there's going to be an introduction made, like as I said, from, one of those other people in our ecosystem. And really the best thing to do is, when you kind of reach out to us or get that introduction made is just send us some information on kind of what you're doing. So if you have a pitch deck or an executive summary or, maybe even a business plan, sending that over to myself or, someone else on my team is just kind of a good starting point. Then at that point, I'll generally, set up a call or a meeting with the company just so I can ask questions based off of what I've learned from what was sent over, answer questions they might have about the program, about the application process, things like that. And, at that point, we'll go into an application. So we'll send them an application and kind of go from there. So, I mean, really, the best thing to do is just reach out to us. And reaching out to us with information is definitely helpful, just so we can kind of wrap our heads around kind of what you're doing as a company. Because as we talked about a little bit here is, the program is statutory in nature. So there is going to be, certain things that the company is going to need to, certain boxes that they'll need to check off to be able to be qualified via the statute.
Yeah, but at the same time, it's clear that you're working very closely with a number of other programs in the state. And so I loved what you said earlier about that you have conversations, but maybe even if they're not a great fit for this program, you are actively engaged in helping them navigate what sometimes can be kind of confusing patchwork of different agencies and programs. So it sounds like even if they're not the right fit, you'll try to help them find a good fit.
Yeah, definitely. I mean, that's well said. I mean, that's what we're here for. So if you think you're a fit, contact me. If you don't think you're a fit, contact me because, that's what I'm here for. So obviously, I'm here to manage this program and, work, help companies apply. But, another part of my role is also to try to find, other resources, whether that's a resource that we have at WDC or, connect with one of our partners. So, my goal in every business that I talk to is, if, hopefully they'll be a fit for one of our programs, but if they're not, can leave them with something that will help them on their journey forward. So, yeah, my role is not just to work on these programs, it's also to help, entrepreneurs kind of find the right fit for something that might help them move their business forward. So, yeah, I mean, all calls are welcome. I'm happy to talk to anyone, and hopefully at the end of the conversation, we'll find a fit either WDC program with a WDC program, or make a connection to a partner or someone else that we think can help them on their journey.
Well, I know we've been talking about the Qualified New Business Venture Tax Credit, which is one of the key programs you work with. But before we started our interview, you mentioned there's a couple of other programs that you also administer. And I'd love to hear for a couple minutes just for you to share a little more about those.
Yeah, sure. So like I said, like you said, we spent a lot of time talking about QMBV, and that is just kind of one of 3 programs that I manage that are directly looking to work with the early stage technology-based companies. So just very quickly kind of go over the other 2 programs that are kind of companions to this or looking to kind of build on the QMBV. Is we have a program which is called the Technology Development Loan Program, and that's WDC's venture debt fund. So we have a fund where we invest alongside the angel and venture fund investors that might be investing to get the QMBV tax credit. So we invest, roughly say 5 to 5.5 million generally each year out of this fund. Do investments from 100,000 to 750,000. We're really going to drive to our amount in a few ways. So the first way we're going to determine how much we can put into the funding round is going to be the stage of business. So a company that's, pre-revenue, looking to kind of develop a product, we can do up to $250,000. A company that's, kind of at the stage where they're, ready to launch the product, ready to, kind of get the first revenue or have got their first revenue, we can put up to 500,000 into the deal. And then a company that's in that growth stage, so we've seen multiple years of sustainable growth, seen that hockey stick start to form, we can put in up to 750,000. And then the other way we're going to drive to our amount is we're not going to be the full funding round, so we want to participate alongside those other investors. So for every dollar we put in, looking for $4 in match capital. So just maybe a simple example. A company comes to us, they're looking to raise $500,000. How it would work is we would be 100,000 of that 500,000, and then the other 400 would come from those angel venture fund investors. So usually we're participating kind of 20-25% of the funding round. So that's kind of the first program that we have. Like I said, it's a venture debt program. So what that is, it's a loan that's going to be repaid. Kind of from a term standpoint, we do a 6% interest rate. 2% origination fee, and then we'll look at repayment structure around kind of what the cash flow of the business looks like. But usually we'll do a 7-year term on our note, and it can be kind of made up of a deferral period, an interest-only period, a principal and interest period. We'll kind of look at that when we're looking at the deal. And then the other thing we do for our loans is we'll ask for a portion of that loan to be able to be converted into equity. So let's say generally 20% of the loan will look to have the ability to convert into equity in lieu of principal and interest payment. So that's kind of the first program. I don't know if you have any quick questions on that.
I'm just curious, what do you do with the equity once you have it in a program? That's interesting.
Yeah, so that's something we've been doing for a few years. Really, I mean, looking to, I guess take advantage of any upside and cycle the funds kind of back into the program to continue to make investments. So that's really what we're looking to do with that. It's really a way for us to look at de-risking the portfolio a little bit overall.
That's a very interesting program as well. And you said there's a third one too.
Yeah, so the third program we have, we'll just talk quickly. It's a pilot program that we just did it during the COVID crisis. So worked with our board of directors to come up with this pilot program. So in this program, we're actually looking to do near equity investments. So we're doing $50,000 investments, and that's going to be via a SAFE instrument, a simple agreement for future equity. Similar kind of protocols there is, like I said, we can do up to 50,000, looking for the same 200,000 in match. So same 4-to-1 match. So we want to participate alongside another 200,000. But the other thing we're looking for is at least 50,000 of that match to be coming from one of the venture funds, so a qualified venture fund. Have to be a QMBV company to qualify this program. At this point, can't have an active technology development loan to do it. So this is something that, like I said, we're kind of testing the waters with. We're calling it's a pilot program that we're doing for this fiscal year. We got 500,000 looking to do, roughly $50,000 safe investments.
I'm curious what mechanisms there are to help companies look for that other matching money. I just know, having worked with a bunch of entrepreneurs and been part of startups, that just finding those institutional investors or high net worth individuals is really challenging. What advice would you give to companies, or what help do you offer in terms of helping them get ready to be more effective to raise that matching money and to find the right places? Because you can pitch to a lot of people, but oftentimes I see entrepreneurs and because I don't know any better, just throwing things against a wall and hoping something sticks, as opposed to really understanding the right fit, the right investor fit for their business model.
Yeah, so definitely, try to help in any way that we can. Always willing to, listen to someone's pitch, give some feedback back on that. We also, a group that we work, really closely with, which I know you had Tom on your show before, but the Wisconsin Tech Council. One of the parts of their organization is the Wisconsin Investor Network. So I always try to connect, entrepreneurs into that group, and they can talk to Bram over there at the Investor Network, just so he can, give them some feedback on the pitch. He's always, he could be a resource to give them an idea of some investors that might be a fit for what they're doing, right? Because as you said, it can be tough to get in front of investors. And also a lot of investors are going to have, they're going to have a focus on what they want to invest in, whether that's an angel or a fund. So you need to make sure, if your company's doing X, but the fund that you are talking to wants to invest in a company doing Z, it's just not going to be a fit from a strategic standpoint or a thesis standpoint from the fund, right? And that could be stage of business, that could be type of business, it could be many things. So, like I said, I'd like to connect companies over to the Wisconsin Investor Network just so they can have a conversation there. Always encourage companies to pitch, as much as they can, right? So, make sure you get out there. There's, like I said, there's events across the different, the Tech Council puts on a couple of different events each year, or 3 events each year, where there's opportunities to get in front of, businesses/investors. So I always encourage companies to do that and apply, to take part in that stuff. Just kind of look at every opportunity. I know throughout the state, something I'm involved with here in Madison, which we're only doing it virtually once a month now, but generally do it once a week. There's an organization called 1 Million Cups, which gives an entrepreneur every Wednesday morning the opportunity to pitch what they're doing. So, encourage people to do that. There's other communities throughout the state have, 1 million cups or different type of things like that where, you can pitch. So it's just, I try to make, like I said, connections to the right resources to hopefully, get them to investors, get them in front of investors, and also just try to encourage them to, be willing to go out there and pitch their business, take that feedback, and, continually refine it. So.
That's great advice. And it's great to know that there's a source of help, because my experience has been almost everywhere you go, there is a wealth of resources, but finding them and finding the ones that make sense for your business, it's often really difficult. So it's great to know that they have a good source, or several good sources. So, but just before we wrap up, Joey, what's the best way for people to reach you or those on your team if they just want to shoot the breeze, or they want to see if one of your programs is the right fit, or maybe just need some help navigating the system?
Yeah, so best way to reach myself or someone on our team is just, give me a call, shoot me an email. Like I said, always kind of here to talk to people. So I know on the web, just looking on the website, my phone number is not on there, so you can call me at any point. My email is not on the website, but there is just like a general, contact WDC. email form that goes into our CRM system that will come to myself and my team. So yeah, I mean, the best way is just, give me a call or contact me via email. And like I said earlier, that's what we're here for. Myself and our team is to talk to anyone kind of at any point. So phone line, email is always open to have a conversation, to see if you're a fit for something that we're doing at WDC, or, see if we can find a fit for you via, a partner or another resource throughout the state.
Are you willing to share the contact information?
No, I'm willing. Yeah, that's fine. So yeah, from a phone number standpoint, my phone number is 608-210-6871. And email would just be my first name dot last name at wedc.org. So yeah, happy to share that out. And anyone that's listening that, wants to have a conversation, that's why we're here today, is hopefully to reach out to people that are looking to engage with us. So
excellent. Well, that's our show for this week. Joey, thanks so much for being with us this week. I really appreciate your time and all of your insights. It was a delight having you on the show.
Yeah, thanks for having me. It was a delight to be here. I always, enjoy talking about kind of what we're doing and what's going on in Wisconsin. So happy to be here and happy to come back another time.
Folks, we've been talking this week with Joey Frayne, the Investment Technology Manager with the Wisconsin Economic Development Corporation, and we've been talking about the WEDC, as it's called, some of its programs, and in particular, something called the Wisconsin Qualified New Business Venture Tax Credit. You can find more helpful information and resources on my website, which is globalocityservicesplural.com. There's a library there of blogs, tools, podcasts, and other resources for small businesses and entrepreneurs. Because the show is for you, my listeners, my door is also always open. I welcome your comments, your questions, your suggestions, or if you just want to shoot the breeze, feel free to email me at dnagel, N-A-G-E-L, at lakesradio.org, and I promise I will respond. Now, be sure to join me again next Saturday at 11 Central, noon Eastern. We'll have another great guest and topic. But until then, I'm Doris Nagel, wishing you happy entrepreneuring.